Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. If there's any background noise, it's not weird breathing, it's frogs and crickets and stuff. So I personally didn't trade today, but there was a lot going on in the market. When you're a full-time trader, you definitely need to keep yourself in check. And this week I was recognizing I'm getting a little burned out. I'm spending too much time on the computer. So I took today and didn't trade and built a garden cart to tow behind my ride-on mower instead. So looking at SPY, we have a daily inside bar with some consolidation. After hours, we had earnings from Amazon and Google. Amazon slightly down, only about 2%, and Google is way up. So they're pretty much offsetting each other. SPY is slightly higher after hours than where we closed, but all in all, not very significant. So again, I anticipate that we're just going to see tightening ranges and nothing really monumental happening until the FOMC, which is only 3.5 trading days away. So essentially we have the all-time high, our daily high or low. We failed to break, well actually we did break that all-time high, just barely, not convincingly. And then today was a daily inside bar. If that inside bar breaks bearish with 299.11 breaking, then 296.70 is the must-hold level to keep the daily uptrend intact. That's the most important level for me. And if the inside bar breaks bullish, then we'll have new all-time highs heading into the FOMC next week. Again, risk to reward. If you're looking at how much reward is there from holding bullish into the FOMC versus how much risk is there holding bullish into the FOMC? There's more risk than reward in my opinion. So I wouldn't be surprised to see a little bit of profit taking heading into Wednesday, just as the market eases up and is a little bit cautious, because again, we've seen the weekly chart now with a higher low every single week, 7 weeks in a row. And that generally doesn't keep up too long. Certainly the V-shaped recoveries have had very significant follow through with higher lows every week. But even here on this massive bounce from December, we saw a higher low every single week, and that only lasted about 10 weeks, and that was monumental. So to be seeing 7 weeks in a row is certainly getting close to being monumental. IWM inside bar, week close, giving back a lot of the move from yesterday. We didn't break 158.03, so at this point, essentially, if we were going to watch the weekly time frame, we have our high, low, lower high. Our weekly higher low is established at 153.40, and the bulls failed continuation here. So we do have to be cautious, because if we were to drop down and break 153.40, that would certainly be a red flag for bulls. It would essentially be a fake out, a rejection, and then a bear break. QQQ, daily inside bar. After hours, QQQ up a solid $1. So high of today was 194.52. After hours is at 194.30s here with after hours now closed. So inside bar, actually it wasn't an inside bar. We did break to a lower low. Most important level, pretty much I'm just watching the uptrend. As long as the bulls hold the daily uptrend, that's all that matters to me. 190.69 is the key level. Lose the daily uptrends and weekly consolidation will be underway in these markets. We will look for weekly higher lows to form, but that opens the door to be much more comfortable taking some bearish trades if we lose the daily uptrend. XLF pulling back as well. Anything on the daily chart above 27.83 is a higher low. Again, I would not be surprised to see profit taking in the financial sector heading into the FOMC 3.5 trading days from now, and anticipating that if there is a rate cut, the financial sector will probably not respond bullish to that. Looking at the healthcare sector, still just a lower high, lower low pattern. No fake outs here. Anything under 92.97 is just a lower high. Our support is down at 91.17, and we're seeing weekly consolidation to try and find a weekly higher low. So this is essentially, if we were to see SPY lose the daily uptrend, this is what I would look for to happen on SPY. The healthcare sector here has seen a weekly higher low every week for 5 weeks in a row, and now we're just seeing this consolidation to look for a higher low to form. So it's a potential glimpse into what I would expect for the S&P 500 when we lose the daily uptrend. Biotech sector finally closed below 55. Been waiting for that for a while. So bears in full control with a red Marubozu candlestick 83.33 is the next support level, and weekly consolidation still underway to try and form a weekly high or low, but we have the tightening range. This is going to be a good one to watch because we know the biotech sector has great volatility with those leveraged ETFs, both bull and bear, but this is a weekly pattern now between the low, the high of the bounce, higher low, lower high. This has been forming for about 7-8 months now. So we're going to anticipate the bulls to potentially form a weekly higher low compared to 79.31. I would love to see a higher low, a lower high, and then a clear break of this weekly equilibrium in August or September. And that will likely, we saw gold, where gold formed a 2-year equilibrium, and when it broke, huge opportunity with that volatility. So this would be a mini version of that, not a 2-year pattern, but an 8-month, 9-month pattern. And when it breaks, those 3 times leveraged ETFs should get some significant action. The VIX here dropped to a lower low under 12, saw a lot of volatility today, or I should say a lot of range in its candlestick. But again, it's 1470 that is the key level. And if we don't see the VIX above 1470, we're not going to see the volatility sector and all those ETFs, TVIX and UVXY, we're not going to see them make any kind of significant moves unless we break that double top level. That is a key level to be watching because it's such a clear downtrend as long as that resistance is intact. So gold is still consolidating, still a daily uptrend here as long as 1400 holds, but a little bit of a fade. And we can see that fade here. If you were drawing uptrends, I personally don't trade off of trends much, but if I were going to draw a trend, it would be right there. And we are right grinding it and trying to hold that, but still in a daily uptrend, just like SPY. We came close to losing the SPY daily uptrend, but we didn't. And we're in the same scenario with gold at this point. But we look at silver, and I don't even have to look at the XAU, XAG chart because it's very clear that silver is still strong. And I consider the last 2 days here a double bottom, 1630.09, 1630.03. So considering that a double bottom, we still have a higher low every single day. I don't really care about, 0.6 of a penny. So we still have a higher low every single day for the last 9 days in a row. And as long as that pattern keeps up, these bulls are on fire. And might as well look at it just to prove it. But XAU, XAG down at its lows and leveling off a little bit inside bar. But until we see that inside bar break, we're not going to see gold gain any ground on silver. Keep an eye out for it because I do expect an oversold bounce on the daily time frame on this chart in the near future, but we'll just be looking for a daily lower high. And again, the point I want to drive home, this chart can go up favoring gold over silver while both gold and silver go down, because if silver pulls back harder than gold, this chart's going to bounce. So most important level for silver, 1630. So dust got our break today, and as I said in the video yesterday, the inside bar on bull miners, I wouldn't really be comfortable playing it if NUGT broke bullish on that daily inside bar, but I would be comfortable playing the dust inside bar breaking bullish. So that broke bullish at 842, and we got a solid 5% of follow through. Now the question is, how much bounce can the bulls get? We have a clear hourly uptrend. That hourly uptrend must remain intact for this move to continue. Anything above 860 is a higher low. That's the most important level for me into tomorrow. And again, we're just looking for a daily lower high to form. We have exponential resistance as our guide. This is the 12-period exponential moving average on the daily time frame that has been resistance for about 2 months. So we're just looking for a daily lower high, and our daily lower high is likely set when we lose the hourly uptrend, which is why that hourly uptrend is so important to me. Looking at oil on the daily chart, still not a whole lot going on. Again, just sticking it on the back burner where I don't care what oil is doing until one of its major weekly levels breaks. So unless we see a break of 60.91 or a bear break of 50.59, I don't care what oil is doing personally. And I'll be watching for a weekly higher low to form. I anticipate we're going to hold 50.59 on the first test of that level. And we're going to be looking for, again, just like the biotech sector tightening up, same time frame. This has been a pattern 8 months in the making. And actually, if you go back to the pre-dump, this has been just about 10 months in the making. And we've got our high before the dump, low of the dump, lower high, higher low, lower high, scouting the higher low. And again, just waiting for the tightening range to give us a break. That's when we go aggressive. That's when we play the leveraged ETFs. Otherwise, we patiently wait, because trading within tightening ranges, that's when short-term time frames get choppy. That's when traders overtrade and give back their profits. I like to play names that are breaking tightening ranges rather than playing within those tightening ranges. Same thing for the health or the natural gas chart here. Heading down towards support 215.6, and anything under 250, just a lower high. Only play for bulls is bottom fishing off 215.6. I don't like that play, really. Again, just patiently waiting for some clarity or a trend change on the weekly time frame. And if that doesn't happen, I personally have no interest in natural gas. A little bit too extended to the downside over the last 9 months, 8 months for me to be looking to play it bearish at this point. I will be looking to play it bullish when the trend changes, but there's no sign of that trend changing. So again, just to wrap it up, S&P 500 daily uptrend still intact, waiting for the FOMC on Wednesday. Not a whole lot of reaction to the tech sector earnings after hours today. We have the biotech sector with a very clear bear break. We'll see how much follow through the bears get there, keeping in mind that the weekly time frame is a tightening pattern that we're going to be watching into August, looking for a weekly higher low to form compared to 79.31. And again, just the same pattern that oil is seeing. We'll see if they break in the same direction. And actually, let's just throw those charts on top of each other real quick so we can see how correlated they have been. XBI in the background here, we'll change it into candlesticks, or bars, I should say. How's that for correlation? Wild. Oil and the biotech sector, we are going to be watching this into the fall. So I appreciate you watching. Hope you do good things out there. Have a great night. We'll see you over the weekend.